Hello people, welcome to the Crypto Clips YouTube channel. On September 15, 2022, the Presage Ethereum merge took place as scheduled. The BELLATRIX upgrade the network's last hard fork before the merge went live, marking the beginning of Ethereum's long-awaited transition from proof of work to proof of stake. BELLATRIX prepares Ethereum's proof of stake beacon chain, also called its consensus layer, for a merge with Ethereum's mainnet execution layer. If you want more cryptocurrency content, Crypto Clipper, subscribe to the Crypto Clips YouTube channel and hit the notification bell. The terminal total difficulty value triggering the merge has been set at 58,6,750 quintillion. This number was expected to be reached somewhere between September 13 to 16. Predictions back then that it will happen around September 15. When the TTD number is reached, the number consensus layer will merge with the execution layer to allow the chain to continue. The chain will invoke a new system for issuing and authenticating blocks of transactions. Cryptocurrency markets appear to be in suspension as traders anxiously awaited the Ethereum blockchain's historic transition to its proof-of-stake network. Bitcoin fluctuated around $20,000 while Ethereum was trading just above $1,500. Stocks and cryptocurrencies sank as August US Consumer Price Index showed that inflation remains hot, but there has not been any follow-through on the downside. Alex TAPSCOTT, Managing Director of the Digital Asset Group at alternative investment manager 9 Point Partners, shared his thoughts on Bitcoin's bright long-term prospects. Bitcoin's simplicity is maybe its biggest drawback because it can't be programmed to do lots of different things, but it's also the greatest asset in my opinion. According to TAPSCOTT in CoinDesk in an interview, I think of Bitcoin as a simple, immutable, highly secure store of value that is completely decentralized and almost impossible to capture by any single force, whether it's a government or company. According to the Ethereum Foundation, the merge will be able to have the network's energy usage. This would enable ongoing improvements to the core infrastructure of Ethereum. The merge, a framework in which transactions will be dispersed across different business blocks, has been around for a while. The beacon chain first appeared in December 2020. August was the third and final rehearsal before Ethereum will go mainnet with a proof-of-stake consensus mechanism. TAPSCOTT is optimistic about Ethereum and believes it has a lot of potential, but there are many more risks. According to TAPSCOTT, I think that the contrast is kind of poetic that this is happening as we move with Ethereum to proof of stake, and Bitcoin is simultaneously becoming its most secure ever. ETH, a digital currency, rose 2.4% and remained 17% below its high of $1,951. Cryptocurrency watchers are interested in the MGR token for its potential to reduce energy consumption by 99%. According to a recent Bank of America research report, institutions could take an interest in the MGR token because they were barred from buying cryptocurrencies that use the proof-of-work consensus system. The milestone of the merge means the Ethereum will be transitioning to a less energy-intensive proof-of-stake model of mining. As Ethereum plans to improve transaction speeds and reduce its fees, they are also expected to implement scaling with sharding in the near future. The price of Ether has blown to $1,665 with a 6.24% increase. TAPSCOTT stated that if you're a big company and are planning on investing millions of dollars in the emerging platform, Web3 is the optimal choice for your project. This is the case because Ethereum is the leader of smart contracting platforms. If there's a large influx of companies building on this platform, it might be attractive to start exploring new options. In a note issued, Owanda senior market analyst Craig Erlam said that some people are saying the merge contributed to Ether's price rebound, but that could equally compound the sell-off if it becomes a buy the rumor and sell the fact event. Time will tell what happens. Ethereum is currently suffering from traffic bottlenecks and unpredictable spikes in gas fees. Although POS does not lower gas fees, it does set up Ethereum to continue delivering on its scalability roadmap. At Coinbase, this event is seen as a huge step in the scaling adoption of the crypto economy. By supporting the event in various ways that align with the company's mission to increase economic freedom, the crypto economy will experience faster growth and broader acceptance. During the merge, Coinbase will restate SegWit transactions as a precautionary measure. Although the merge is expected to be seamless from a user perspective, This downtime allows us to ensure that the transition has been successfully reflected by our systems. We don't expect any other networks or currencies to be impacted and expect no impact on trading for these tokens across our centralized trading products. The trading bot will inform you via Twitter and the status page that these tokens are available for deposits and withdrawals. We strongly recommend that you don't send your ETH to anyone as they ask. Trying to upgrade on the inside to an ETH2 token, there's no such thing as an ETH2 token, and your wealth will be secure and untouched during this period without any action on your part. There is now a separate merged ETH-ETH2 balance for staked ETH that was held in ERC20 tokens. This balance will show up on your ERC20 wallet, as well as any unstaked and DAPP contract ETH balances you might have. In the same way, Coinbase sets the ticker ahead of the time to represent these assets. Two wallets ETH2 will not be unlocked until the protocol upgrade is finished and complete. One wallet will be locked already, while another will be locked in the early part of 2023. Users with ETH and ERC20 balances posted by users with Coinbase Prime may experience temporary delays in custody withdrawal availability. If you have any pending withdrawals or deposits using this wallet, we recommend initiating these transactions before the merge completes. We will send specific institutional customer communications before the transition to give our customers specific guidance on timing and SLAs during this time. Customers with vaults at Coinbase Cloud should expect approximately 10 minutes of downtime in advance of the merge. Customer infrastructure will not experience significant downtime when the merge block is passed, and changes will be backwards compatible. Our customer success team will reach out to inform you about upgrade timelines and if any other actions are required to prepare you for the merge. If you have ETH or ERC20 balances, NFTs in your Coinbase wallet, and you're logged into the Coinbase wallet with your private keys, it's likely that your account won't be impacted by this transition. If you don't use a self-custodied crypto, but you still want to trade on the Ethereum mainnet after the transition, set the network fees using GDAX. As always, it will be at the network's discretion to charge a fee for transactions and interactions on our platform. During the merge time, payments are temporarily paused to ensure protection of funds. Customers will not be charged when processing new payments. In-process payments are also delayed while they're processed to be confirmed after the merge is complete. There's no action required other than people waiting for their in-process orders, and their orders will be confirmed at this time after the merge is complete. As of now, the Ethereum development release is known as the Merge. This release is the culmination of years of work from the Ethereum Foundation, independent researchers, client teams, infrastructure providers like Coinbase Cloud, and many other companies. For information about Ethereum-specific updates, you can follow the Ethereum Foundation blog and their Twitter account for continuous updates. During the merge, CBETH will officially support the ETH POS chain, and only CBETH tokens on the ETH POS chain will be naked to pick up staked ETH. There is nothing you need to do during the merge. However, beware of scammers who may try to sell tokens marketed as CBETH on unsupported chains. The Ethereum network has finally merged with the proof-of-stake network to make it more efficient. After the merge, the energy used on the proof-of-work stage on the Ethereum blockchain will drop by almost 99% to 8.89 TWh per year. For example, a new block is mined by the Ethereum network every 12 seconds, and Ethereum will now use a proof-of-stake POS algorithm. The POS allows any person to temporarily get a portion of the Ether mining reward by holding their tokens as collateral. This staked Ether will act as a collateral that can get slashed if the validator behaves dishonestly. The validator will be responsible for storing data, processing transactions, and adding new blocks to the blockchain. This will keep Ethereum secure and earn validators new ETH in the process. According to Rajagopal Menon, Vice President Wazir X, a cryptocurrency exchange, at present, it takes about 13 to 14 seconds to mine one block of Ethereum. The switch to a proof-of-stake system will reduce the validation time for one block for 12 seconds on average, back to 1 second. Despite the small increase in processing speed, users won't be able to notice any difference. There is likely to be a limited increase in Ethereum's transaction speed as the software upgrade will change its mechanism to perform proof-of-stake from proof-of-work, and not the speed. However, the merge is expected to mildly increase its speed. According to Dilip Seinberg, founder and CEO, MuffinPay, a bill payment and utility crypto, with the rise in volume brought on by the Ethereum network merger, the throughput increases and becomes easier to use. With a more efficient blockchain, Ethereum will be able to store a greater number of transactions per block, making it faster and easier to use through its application. The more people who use Ethereum, the cheaper transactions will be. Despite this marginal improvement, Ethereum will lag behind its biggest rival blockchains, such as Solana and Avalanche, which are far ahead in terms of transaction speed. However, Ethereum Foundation has clarified that it will improve the speed and gas fees in the future updates, but has not given any clear timeline. Seinberg continued, in order to become a validator on the Ethereum network, you will need at least 32 ETH, or you can stake your tokens with participating centralized exchanges. This is great because now more people with less than 32 ETH are able to earn rewards after winning the block reward system. The cryptocurrencies will provide different annual yields that are locked into a period, while the exchanges will have their own offering of bounties and rewards. Mining rewards and transaction fees are tied to the number of users. If the blockchain has more users, you will receive more rewards and a higher percentage return. ZebPay CEO Avinash Shekhar predicts that after the merge, returns for exchanges and validations will go up. However, investors in exchanges should be wary of any platforms with high returns on deposits. There's risk associated with staking rewards platforms such as HODLNOT, due to this company declaring bankruptcy last month without paying out what is said would be 12% for some tokens. You should always use a trusted exchange to ensure your cryptocurrency is safe and make sure that your account is fully insured. Ethereum's massive overhaul is finally finished and the blockchain network is now much more energy efficient. After several years of development, the new Ethereum system has garnered mainstream attention. It was no small feat swapping out one way of running a blockchain known as proof of work for another called proof of stake. The metaphor that I use is this idea of switching out an engine from a running car, stated Justin Drake, a researcher at the nonprofit Ethereum Foundation who spoke to CoinDesk prior to the merge transpiring. The payoff is potentially up to 99.9% less energy consumption. That's like Finland has suddenly shut off its power grid, according to one estimate. The upgrade of Ethereum will make the network more secure and scalable. The upgrade will also make the Ethereum network, which houses a $60 billion ecosystem implementing cryptocurrency exchanges, lending companies, non-fungible token markets, and other apps, more secure and efficient. On June 29th at 7 a.m. UTC, the Ethereum mainnet's hard work went live. Many people tuned in to watch on YouTube, followed by key metrics coming in suggesting system's infrastructure had remained intact. It was 15 minutes long before the merge officially finalized. Since then, the price of Ethereum has been largely flat over time. The update, which ends the network's reliance on the energy-intensive process of cryptocurrency mining, has been closely watched by many different people. Some people like it and think it's an improvement, while others disagree. Mark Cuban, the founder of the Dallas Mavericks and founder of Time.com, stated that the merge is worth watching closely because it might make ETH deflationary when it's designed to avoid such a situation. It was clear from the start that Ethereum would switch to proof of stake. However, the technical push for it turned out to be a bit complicated and risky. Many doubted it would happen at all. There's a part of me which hasn't completely realized that this is actually happening, according to Drake. I'm somewhat in denial, because I've trained myself to just expect it to happen in the future. On top of the complexity of this update, there were many people involved, dozens of teams and thousands of volunteers. This was one of the largest open source software endeavors in histories. Team Baco, a developer on the Ethereum Foundation, tells CoinDesk that the merge hard fork strategy can attract skeptics by providing a way for people to experiment with and begin using Ethereum. Bitcoin, the first digital currency introduced in 2008, introduced the world to a decentralized ledger. This decentralized ledger, which is called blockchain, became particularly popular with investors who saw it as a secure way to conduct transactions without relying on third parties such as banks to mediate trade. Ethereum, which was first introduced in 2015, expanded upon the core concepts of Bitcoin with smart contracts, or computer programs that effectively use the blockchain as a global supercomputer recording data onto its network. That innovation was the essential ingredient behind decentralized finance, DeFi, and NFTs, the main catalyst of the most recent crypto boom. The merge, which retired, what from Ethereum? It retired the system where miners competed against each other by trying to write transaction fees to its ledger. Now they solve cryptographic puzzles, and in return, they'd have rewards for doing so. That's it for this video, Fortune Fastlaner. Remember to subscribe to our channel, and if you feel like we've delivered value, please share this video with one person. That's right, just one person as a token of your appreciation for the hard work we put into making content that educates and helps you on your mission of building your own fortune. Remember, you can watch video after video, but it isn't until you actually take action that you'll start to see results. See you soon!